Welcome. Good morning, good evening, good day, wherever you may be. Today, we're going to talk about international taxes for digital nomads, otherwise known as location independent entrepreneurs. To make it as useful and as targeted as we think is appropriate, what we're going to do is run through just a few slides. I'm not going to talk for more than, let's say, 15-20 minutes. And then we'll open up into Q&A, and that's your opportunity to ask any questions. You can do so in one of two ways. You can type in the chat box below, or you can unmute yourself when invited, and you can make your contribution or your question. So without further ado, I'm going to jump into my short slide presentation. Okay. So what I thought of doing is just kind of making it. I mean, when you talk about taxes for international entrepreneurs, it could be a whole degree on its own, far less just a short webinar. So what I wanted to do is call out 6 things that you as a digital nomad or location independent entrepreneur should keep in mind when it comes to international tax situation. So just to provide context as to who I am and who we are, my name is Derren Joseph, and my team is a semi-autonomous team within a larger practice called Moore's Roland Asia Pacific. We have 30 offices across 12 countries. I've actually been based in Singapore for the past 7 years or so as team in Singapore. We're also a member of Fusion International, which is another network of firms that has a strong presence in Europe. So when we have European tax considerations, these are the guys that we would tap into to provide advisory and compliance. To those who are just joining us, please mute yourself until we get to the Q&A section, and you can unmute and contribute. All right. This is who I am. Now, because I am licensed by the U.S. Department of Treasury, I'm legally required to say that nothing we say here today should be construed as advice. I may be a tax consultant, but I'm not your tax consultant, not yet anyway. And we're having a general conversation about general principles. There's no way any qualified professional can give competent advice based on 1 or 2 sentences. You really need an engagement where they can dig deep into your situation. So therefore, nothing I say here should be construed as encouraging you to pay less than your fair share of taxes in any jurisdiction in which you're exposed. So that's how I stay out of jail. So that's a disclaimer in writing. So let's jump in. So as I said, I wanted to make it as targeted and as relevant as possible. So I call out what I think are the 6 most important things you as a digital nomad / location independent entrepreneur should keep in mind. 6 things. First is the idea of flag theory. I don't know how many of you may be familiar with it. I know there are companies that have called themselves flag theory, and they can call themselves whatever they want, but as far as I'm aware, this is a concept that was developed by a guy in the 1950s. And basically, it's about having a diversified lifestyle. You don't have all your eggs in one basket. So where you may be resident may be different from where you're a citizen, would be different from where you store your wealth, maybe different from where you've incorporated your company, maybe different from where you entertain yourself, and so on. So it's about diversifying your lifestyle. We can get into that in a bit more detail later on if it's relevant to you. The second thing is, this is one of my bugbears, hashtag fake news. So many times members of my team would send me links to various groups, chat groups on Facebook or whatever, where unqualified, uncredentialed people are giving tax and immigration advice. And I think it is bizarre that professionals would trust the financial well-being of themselves, their company, and their families in the hands of unqualified advisors. But I must declare I have a sort of conflict of interest. Why? because we probably make most of our revenue from cleaning up the mess created by other people. So I know it's sort of weird, but we always advise anyone, be careful of whom you get advice from, because you don't know what that person's situation is. You may think they're similar to you, but you may have a different residency. There's some nuance that is really, really critical that would make what worked for them completely inapplicable to you. And we can jump into some of these later on as well, if it's relevant. A third thing that I wanted to call out would be direct versus indirect taxes. For those who are just joining us, could you please mute yourself? You get an opportunity to unmute yourself when we get into the Q&A section of our short discussion. So I think everyone is pretty clued up on the idea that, hey, I have a company. That company needs to file and pay taxes somewhere. And they clued up that, hey, I'm a person, so I probably need to be filing and paying taxes as an individual somewhere as well. But those are direct taxes where you're paying from the company to a tax authority, or where you're paying from yourself to the tax authority as a personal income tax payer. What people seem to sometimes forget are indirect taxes, and this really comes into its own if you are in the e-commerce game, if you're selling physical products online. For example, if you're on eBay or Amazon or whatever, Walmart, wherever you're going to be selling. The idea of indirect taxes is basically where you are not paying, where the person that's paying the tax doesn't pay it directly to the authority. They pay the tax to the person from whom they bought the merchandise. And that person collects the tax on behalf of the authority, and they're supposed to pass it on. So those are indirect taxes. In the US, they're commonly known as sales and use tax. It'll be VAT in some jurisdictions, or VAT. It'd be GST in some jurisdictions, or just sales tax, or some jurisdictions have a services tax, which we can touch on later on. But these indirect taxes are something that's becoming more and more critical, and it's being more heavily policed than it was previously. And tax authorities are becoming quite aggressive in enforcing it. So again, it's something to pay attention. I'm selling online. Do I need to register and pay indirect taxes? Right? The fourth thing I wanted to call out would be your place of effective management. So again, some people are under the impression, I incorporate a company in Estonia, I incorporate a company in the BVI, in the Caymans, in Dubai, Vanuatu, Seychelles, wherever, pick your jurisdiction. And then I'm going to go hang out in Portugal, or I'm going to go hang out in Bali, or whatever. And my company is incorporated outside, therefore I'm not supposed to be paying any taxes. Wrong. Most jurisdictions have the idea of nexus, and more particularly within nexus, the place of effective management. What does that mean? That means that even if your company is incorporated in another jurisdiction, if decisions are being made of a strategic nature, some tax codes call it management and control, some tax codes call it mind and management. But the point is that once decisions of a strategic nature are being made within their jurisdiction, they have a right to tax that company as if it were a local company. And that is something that is missed out. Of course, then people would ask the question, well, how are they going to know? That's another conversation, but we're a tax authority to figure it out. They completely reserve the right to tax you for operating a company within their jurisdictions. Tax that company like it were a local company. And continuing on the concept of nexus, and this ties back as well to the previous point on indirect taxes. In the US, and let's talk about the US because a lot of people that we deal with, they sell online, and sales and use taxes is a thing. Historically, like before, I think probably June, was it 2017 or 2018? Not too sure which one. Nexus was really discussed in the context of physical presence. So if your product was being warehoused in a like in an Amazon warehouse in a given state or jurisdiction in the US, then it'll be subject to the indirect tax, the sales or use tax. Now, what has happened is that it's shifted from a discussion around physical nexus to one around economic nexus. And what we mean by that is by virtue of just doing business in that state. So affiliate links, click through nexus, or or someone, or you have enough clients or enough customers buying your product in a given jurisdiction, even though the products may not be stored there as it were physically, that may constitute a nexus, and you'll be subject to sales and use taxes. And you know what? In some states, it even means that you'll be subject to income tax as well. So the idea of nexus is particularly important, and we advise, especially clients that are selling online, to consider engaging in a nexus study. Get a competent professional to look at your business model and say, these are the jurisdictions in which you're exposed. You're probably going to want to register and pay taxes. Why? Because if they figure it out on their own, they're going to levy that tax plus interest, and it's retroactive. So there's a look back. They will not just start counting from when they found you, but they will look back to when you started. So the sooner you start doing the right thing, the easier it will be for yourself in the long term. And 5, so what I wanted to talk now about is your residence and or citizenship. So what I tend to do is I divide the citizenships, or let's talk about citizenships, into 3 buckets. And the first bucket will be US, those that are US exposed by virtue of either citizenship or residency. You would know that, or you should know that, even if you're not physically present in the US for years and years and years, you're still subject to US taxes. Therefore, you must still file and pay taxes, regardless of where you reside. Without giving it up, surrendering that green card, relinquishing your citizenship, you will always be US exposed. So something to keep in mind. Now, there are some opportunities in terms of planning. So for example, taking advantage of the foreign earned income exclusion. But for the most part, you have serious responsibilities, and especially when it comes to reporting. It seems counterintuitive that the tax code is written in this way, but unfortunately it is. So if you don't pay your taxes, yes, they'll hit you with some interest and penalties, but if you do not report that you have been investing overseas, or you have a foreign bank account, you have a foreign company or whatever, it could be not just civil penalties, but criminal charges as well. It is pretty aggressive. And this is, I think, a result of the post 9/11 sentiment, and it was enshrined in the Patriot Act. So the implicit assumption is that if you are not declaring something, it's because you're hiding and you're up to some sort of nefarious purpose. And that's why they come down on you so hard. So we tell you to do your best, BEST. So banking, you need to report your financial accounts overseas, estimated taxes, make sure that you make quarterly at least tax payments to the IRS if you're so exposed, and be mindful of your state. Most states in the US are domicile states. Therefore, unless you take deliberate action to several residency, even though you're outside of the US, you may still be a resident of that state unknowingly, and they would still be taxing you your worldwide income. And I don't have it here, but transfer taxes, gift taxes are still something to be cautious about, especially when you're traveling abroad. You get involved, husband, you get married, husband, wives, girlfriends, boyfriends, or just business partners, and you guys get into deals together, and there's, they gift you money, or they lend you, or they give you money to invest in a business, or you lend them money to invest in a business. Those are reportable, and the penalties for not being compliant are pretty aggressive. And then now the State Department has got on board, and you can lose your passport. And I give you the example, we had a client in Malaysia, and she was not exactly 100% compliant. She went into the US Embassy to renew her passport, just like everybody else, and they withheld it because she had an outstanding debt with the IRS. So she was in a very sticky situation in a foreign country without a valid travel document. So please be mindful. Then the second category we have would be Kanzuk. I don't know. I've seen it online, so I thought it was cool. I'll borrow it. So Canada, Australia, New Zealand, UK, and to a large extent Europe as well, although there's some nuances. But the common thread, and I know it's dangerous to paint with a broad brush, but the common thread is unless you take deliberate and specific steps to sever your tax residency with these jurisdictions, even though you're not living there physically, even though you're not living there physically for years, you may still be deemed tax resident by the CRA in Canada or the ATU in Australia and so on, or HMRC in the UK. So again, speak to a qualified professional. Make sure you don't have any surprises waiting for you if you ever visit your homeland again. And similarly with the EU, there are very, very specific rules, and they vary by jurisdiction. Some are stickier than others. In my mind, one of the stickiest will probably be Italy, where if you move to a so-called tax haven like Dubai or Malaysia, where some people are there on MM2H, my Malaysia second home, basically a jurisdiction in which you're living tax-free, then there's a fallback position where Italy will tax you. And many other European countries have this as well. They're fallback rules. So please, depending on where you are a citizen, be mindful of the rules, get specific advice. Rest of the world. Well, you may think that, hey, I don't have a European passport. I don't have a Kanzuk passport. I'm not American. I'm free and clear, right? Not so much. So in those cases, I would say you're less conscious of tax rules, but you should be conscious of banking rules. Because if you're speaking to anyone who's doing any sort of serious business right now, you'd know that the big challenge is opening and maintaining a bank account. Because the rules for compliance, for banking compliance, and it's no fault of the banks. The bank is just responding to higher authorities that are concerned about money laundering and stuff like that. They are so cautious, and their knee-jerk reaction is if they don't understand what you're doing, if you're doing anything that's unusual, they're going to kick you out. They're going to tell you, come take your money. We don't want you, go away. So what we have found is people have been traveling, people have been moving around the world, living the life, being free, and they work online. We had a client in Southeast Asia who was apparently a popular DJ, and he made some decent money, and he had a situation where he needed to return to his European country of origin. Family emergency, he needed to take care of his mother. So he can fly back to his European country of origin. I don't want to specify which country it is because just in case people piece together who this person may be. And when he tried to remit the money that he's been earning over the years that he's been traveling and touring back to his European country of origin, the bank is like, hold on, where did this money come from? And he'd be like, don't you know who I am? Look at my website. I'm somebody, right? They will say, okay, but that still doesn't help us with our compliance responsibilities. So prove to me that this money is legit. And he had a problem. And it's not just him. A lot of people do. We have had quite a few clients in a similar situation where they've been traveling around. They have managed to open bank accounts all over the world, and they wanted to get back to an advanced economy, i.e. Europe, North America, Australia, New Zealand, Japan. And they cannot bring their money back because they cannot prove that that money is legit. And this is where taxes come in. Because one thing, if you say, well, I can produce invoices, come on, give anybody 5 minutes in Microsoft Excel and they'll give you an invoice. Invoices don't prove anything. What does definitely settle the nerves of that nervous banker on the other end of your phone line or the other end of your email who's telling you you cannot remit any money and it's going to be frozen and sent back is if you produce a tax return. If you produce a government document that says, hey, this money is legit, it has been declared to a legal authority somewhere in the world, whether or not you have paid any substantial taxes, another discussion, but they have to do something called a source of funds report, and that is a document that they feel comfortable referring to, a tax return. So even though you may not legally be required to pay taxes if you keep moving and you never have nexus with anywhere, et cetera, you may still want to be tax resident somewhere. So that is like a strategy that helps you from a banking or business perspective. You will always be able to answer questions as to the source of your money. And that's a really big deal. So, and I said there were just 6 things I wanted to talk to you guys about. And number 6 is obviously you need a team. So I cannot imagine how one person can declare themselves to be an international tax expert and feel comfortable talking about the entire world. That's impossible. Even within one country, like within the US, someone who is comfortable with indirect taxes may not know direct taxes. State taxes may not be so good with federal or international. So there's a lot of specialization. So what you're doing, I think, if I were to give advice, is make sure that the persons you've engaged with is not just qualified, legit, but they're part of a team so that they have other professionals that they can fall back on to make sure that when you get advice from them, it is sound advice from people qualified in the jurisdictions in which you're exposed. So that's it from my side. I'm going to stop sharing now. And I'm going to open up the floor. Do we have any questions or comments or concerns? You can either type or speak.
Hey, Derren, I have a question. Can you guys hear me?
I can hear you loud and clear, sir.
Perfect. So, I'm a US citizen, but I am a permanent resident in India since this year, 2019.
Mm-hmm.
And my question is, I do have to pay, as you said, federal income tax in the United States. But for state income tax, if I used to live in, let's say, the East Coast, which state do I have to pay the state income tax, or do I need to say the state income tax?
Thanks for your question. Now that's a pretty common question, and I would say that it really depends because you have 50 or so different states with 50 or so different rules. So it's really hard to paint with a broad brush. But if you come from one of the 8 states without any income taxes, then typically you're okay. So like your Delaware, Nevada, Texas, Florida, Alaska, or whatever, then you're fine. If you come from one of the other states, especially if it's a domicile state, you're probably going to want to look at the rules of that specific state and make sure that you sever tax residency as defined by the rules of that state. Now, if there's any sort of uncertainty at all, what we advise our clients to do before they go international from the US is to re-domicile themselves to another state. And again, it'll depend on your situation, but that typically involves, I'm not saying that it's you, but generally speaking, it would involve registering to vote, getting a driver's license from another state, for example, your Florida, your Nevada, your Texas, or whatever. So that if there's any sort of dispute, if there's any gray area or uncertainty, you can demonstrate that, no, I am domiciled, I am connected with another state, not one of the states that do have a high enough income tax to bother you.
Excellent, Derren. Thank you so much. Really appreciate it. Thanks a lot. Yeah.
Sure. So I'm seeing some questions. I'm just going to read the questions in the box below. The first one is, if you're not staying in a country for more than 183 days, are you not obliged to pay taxes anywhere? The answer to that, I'm referring to some of the slides that I just had. So essentially, if it is that you are from the US, either by virtue of passport or green card, you'll be paying taxes in the US. If you are from one of the other developed countries, Canada, Australia, New Zealand, UK, another European country or whatever, then you have to be cautious about the fallback position, the fallback rules that they have. So you need to prove that your center of life is no longer in that given country. So assuming that it's a European country. And I think a popular case would be, I think it was Boris Becker, the tennis star, for those who are old enough to know who he is. So he is originally from Germany, and he declared, Germany is a pretty high tax jurisdiction. He declared that he no longer lives there and he lives somewhere else. But, you know, he's a famous guy. So he has people that take pictures of him. You know, he's someone, people snap pictures of him and put it on Instagram or put it on Facebook when they see him. So on social media, the tax authorities noticed that he was back in Germany a lot. So they began to have a closer look at him, and he still declared, hey, I'm just visiting my friends, my relatives, my family, whatever. But then they checked an apartment that was supposed to belong to his sister, and they found his toothbrush there. And to them, that showed that, you know, he wasn't just visiting, he had a close connection with Germany, close enough that they wanted to levy taxes. So my first point is, before you think I'm not tax resident anywhere, if I'm moving around and I'm not staying more than 183 days, look at your citizenship and residencies and see whether there are fallback rules that say if you are not somewhere, we claim you back. Australia is really, really aggressive when it comes to that, as are some of the jurisdictions. And then the second thing I want you to think about are the banking rules. So yes, I may not be tax resident anywhere, and therefore I may not have to pay taxes somewhere. But what about when I need to move money around? And for some reason, I need to declare that source of funds. Can I do it, or would I get in trouble? So those are two things I want you to think about. Next question. So if I renounce my residence in Romania and establish one in Georgia, do I need to still pay taxes for 3 years in Romania? Do I have to report it? Now, I'm not qualified in Romanian tax, but I can refer you to a colleague who can help you. But essentially, if you are moving from one European country to another, the fallback rules don't typically apply. Typically, they don't apply. So once you register, because when you move to another European country, you have to register with the local tax authorities. Once you do that, and you perhaps notify the European country that you've come from, that you have shifted residency to this other one, then that typically means that you're no longer resident there. However, if you have source income from your European country of origin, that may still be subject to tax in the country of origin. So typically, once you do the proper registration within Europe, it tends to be clean. Sometimes it isn't, but that tends to be how it is. Next question. Some from Greece. Someone just said personal income tax. I'm from Greece. I'm not sure what the question is there, if it's a statement. Next one, on the issue of team, do you have a presence, expertise in Portugal? If so, experience with US persons living and doing business in Portugal. Thank you for the presentation. Yes, I am actually doing this webinar from Portugal right now, from Caparica in Portugal. And I am a qualified US tax professional, and I work with a Portugal tax lawyer whose firm I actually had on one of the opening slides. So we work together with international tax clients. So yes, we can help you. You can reach out to me afterwards and we can help. That's no problem. Next person, speaking of Portugal, can you and your team advise on personal income tax for earnings in UK, Portugal, and China? I'm an EU national, currently fiscally registered in Portugal. Yes, we can. We do have partners in the UK and in China, both in Hong Kong and in mainland China as well. So yes, we can help you with that. Sorry it's late, I'll reach out to you. And what I'll do is I'll put my email address in the chat box, so help at HTJ.tax. What about territorial tax? If you live in a country with territorial taxation, can you have a company in another country? Yes, you can have a company in another country, but if you're in a territorial tax jurisdiction, for example, Singapore, Hong Kong, Malaysia, those are some popular ones. Remember, we spoke about Nexus in one of the earlier slides. Unfortunately, it still does apply. So from Singapore, Hong Kong, Malaysia's perspective, in their tax code, the two tests that they look at are management and control. So even though the company's incorporated in BVI, Caymans, wherever your jurisdiction of choice is, the fact is that you're operating that company from within their territory. Therefore, it is deemed to be a local company. And under those rules, you will have to pay tax as if it were a local company. So yeah, that's how that works. Any other questions?
Hi, Derren. I do have a question, but I'm gonna just say it because I cannot even, I don't know how to word it. So I am Mexican. I actually met you in Bali in Outpost. You did a talk there a year ago. Yeah, good to see you too. So anyway, I'm Mexican and I just moved to Denmark, and I got my residency like less than a month ago. So I'm just unsure of how I need to do like I mean, I still have clients in Mexico, and I'm planning to still work with them. So I don't know if I need to like close down like the company there and like open a company here. And then also I know Denmark like tax wise is like so much higher. So I'm a bit of unsure on how to like go about. And of course, like the work that I do is remote, and I also have an e-commerce with a friend in Mexico.
Gotcha. Okay. So like most European countries, in Denmark, you're going to be subject to tax on your worldwide income. And as you pointed out, it is a pretty high tax jurisdiction. So that's your starting point. Now, in terms of the Mexico source income, I can perhaps refer you to a Mexican tax professional if you don't already have one. But essentially, you may be looking at indirect taxes on the merchandise you're selling online. You may be looking at withholding taxes on the funds that are leaving Mexico to come to you in Europe, in Denmark. But once things are, and I think this is a concern that many people have, once you get the right advice and you structure your affairs in the right way, you shouldn't be paying tax twice on the same income. Why? Without even having to bother to refer to a treaty, most countries respect the concept of a foreign tax credit. So obviously, Denmark being a higher tax jurisdiction, they would typically say, okay, you've already paid tax on that income in Mexico, if it's Mexican source income. Tell me or show me how much, and you just pay the difference to us in Denmark. Typically, depends on what it is or whatever. So the point is that once things are structured in the right way, you should not be paying tax twice on the same income. But that you'll probably be paying Danish taxes on most things because Denmark is the higher tax jurisdiction.
Yeah, but in that case, like, isn't that a lot of work? Because then I'll have to have an accountant in Mexico and then an accountant in Denmark.
You're correct, and you need to make sure that they're in constant communication with each other and they coordinate their work. You're right, and the more jurisdictions you're exposed to, the more important it is that the professionals coordinate with each other. It helps if they're from like the same practice, because then they naturally speak to each other anyway. And they have experience of dealing with clients together anyway. But if you can't do that because of the nature of the jurisdictions you have in play, you need to play an active role in making sure they talk to each other to ensure that you don't pay tax on the same stuff twice.
Okay, it sounds very complicated. But could you refer me, like, I know you said someone in Mexico, but do you know anyone also in Denmark?
I do. I believe we do have a partner firm in Denmark. I left my email address in a little box below. Shoot me an email, and I'll check and I'll introduce you to both accordingly.
Okay, I didn't see the email, but is it in the chat?
Yes, I'll type it again, help@htj.tax. Okay.
Oh, perfect. Super. Thank you.
You're very welcome. And who's next? Territorial tax. We did that. My company is registered in the UK and my bank account too. I'm planning to move to Bali. Is there something I should be aware of? Absolutely, there should be. And this ties back to the concept of nexus that we discussed. Yes, your company is registered in the UK, but if you are in Bali, if you are in Indonesia, then under Indonesian tax rules apply, assuming that you become tax resident in Bali. If you're spending more than 183 days, you would be, and or if you're running a business from Bali, you would be deemed resident, tax resident in Indonesia. So you would want to consult with an Indonesian tax professional to make sure that you are doing the right thing by Indonesian tax rules. So the company may have, because you're the main decision maker of the company, presumably, that company may be exposed to taxation in Indonesia. And you yourself, by virtue of being there for more than 183 days, so may you from a personal perspective. So definitely you'd want to consult and get some professional advice. Again, prior to COVID-19, I was probably in Indonesia for 1 week each month. Now it's a bit difficult. But our partner firm in Indonesia is the 5th largest accounting firm in Indonesia, with an office in Jakarta and one in Bali. So I can introduce you to my counterparts there, should you need that advice. Let's have a look. Any other questions? You're welcome. Any more questions?
Sorry, I do have one more.
Sure, sure.
So what's the point of like this, like getting, for instance, like the Estonia, that you could get the e-residency and all that? Like, what's the point when you at the end have to pay taxes like wherever you are or wherever your citizenship is?
Estonia has been really good at marketing itself. And when it first came out, the e-residency thing as a label was a bit slightly deceptive, and everybody rushed out and they got the little e-residency cards. Everyone had one in their wallet. But I don't know about your network. In mine, eventually few and few people bothered to renew it or either use it because of precisely that. Unless your situation is unique, it's of dubious value, in that if you, yes, you may have a company registered in Estonia, which is great, but if you have nexus with another jurisdiction, for example, Indonesia or whatever, then Indonesia would want to tax the Estonian company because you're running it from Indonesia, right? So then what's the use of that? I think it's helpful for those who may be moving around like perpetual nomads and they would like a corporate tax jurisdiction that is reasonably friendly. So obviously with Estonia, you get to defer paying taxes, well, for a long time, and you pay taxes when there's a distribution. Now, that's great. So when you're building a business, that's a fantastic opportunity because you get to continuously plow back profits and make it work for you to grow your business. But on the flip side, if you're ever tax resident in another jurisdiction, they may want to tax the profits, unlike in Estonia. And then secondly, when you eventually pull that money out of the Estonian company, it's going to be taxed at 20-something%. Now, there are a lot of other jurisdictions that are way cheaper than 20-something%. And I think it's like mid-20s as well, because you pay dividend tax plus the corporate tax. So from that perspective, it doesn't seem that attractive. But for some people, it works. For some people, it does work. But right now, I think they've joined many other jurisdictions that have a real residency program. So they allow people to be resident from an immigration perspective, and they can be personally tax resident in Estonia as well. So again, if you're looking for a jurisdiction that you want to like plant a flag, and you need to, for example, if you want to cut ties with in Australia, somewhere else that may be a bit too sticky and uncomfortable for you, then Estonia could be an option, as can be Barbados or Bermuda or Portugal or whatever other jurisdictions that offer long-term visits. So, but yeah, Estonia, it's not that it's good or it's bad. It works for some people, it doesn't work for others.
Okay. Okay. Perfect. But it seems like I'm stuck with Denmark now, right?
Yeah, unfortunately, by virtue of being physically present and being a tax resident of Denmark, Denmark is taxing you your worldwide income at a relatively high rate. You're correct, yeah.
Okay. All right.
Someone asked, how much do we charge to create a company in a tax-free jurisdiction? It really depends. It really depends. We don't, as a practice, well, within the world of offshore companies, I'd say, and I know this is just my perspective, everybody has theirs, they're probably like tier 1, tier 2, and tier 3 jurisdictions. A tier 1 jurisdiction would be an offshore company, but maybe in a developed economy, like somewhere in Europe or North America or whatever. And remember, offshore is a relative concept. If you live in Denmark, then a company in the US is offshore to you in Denmark, right? Because it's in another jurisdiction. So basically the developing world, we call that tier 1. Tier 2 would be credible jurisdictions that are not in the so-called advanced world. So I'm thinking Hong Kong, Singapore, Malaysia, let's see. Dubai has come off the blacklist, so they're probably okay, right now. So that type of jurisdiction. Then the tier 3 are like your Cook Islands, your Vanuatu, Seychelles, Belize. Tier 3 jurisdictions, they're generally quite cheap. And Belize, these are the ones where every time you go into an online forum and you say, where should I form a company? And then somebody jumps in and says, Belize or whatever. Yeah, those are the ones that spend a lot of time pushing themselves. A tier 2 or tier 1 jurisdiction doesn't need to push that much, but the tier 3s do. Now, the problem with the tier 3s is that they're really cheap, but the question is, where are you going to open your bank account? If you have a Belize company, where are you going to open a Belize bank account? Who's going to take you? If you're thinking a European country, the US, Australia, probably not. They don't want to touch you. It's hard enough right now with banking in general. And when you try to open a bank account from a jurisdiction that does not have that cachet, you're going to find yourself in a world of problems. Even if they dare to take you, the compliance burden, like the questions that they will ask you, it'll just get you tired. It's really tricky. So basically tier 1 and tier 2 jurisdictions, like the ones I've mentioned, those are the ones you could probably more easily get a bank account, but even those are a challenge. So that's a long-winded answer, but the point is, it depends on the jurisdiction, and it's probably going to be on the higher side. I don't see a credible jurisdiction, the cost being any less than, let's say, $3,000-4,000 US. Then plus you want to add things like a virtual office or whatever. So I'd say on the low end, if you're looking to budget, you're looking at least $4,000 for a company in a low tax jurisdiction. I wouldn't say tax-free, but I'd say a low tax jurisdiction. In terms of tax-free jurisdictions, those are really hard to find. I think one of the conditions for Dubai coming off the blacklist was that they have to charge something like 3%. Malaysia, if you wanted one of the offshore companies in Malaysia, they are now 3% as well. BVI and Caymans can still be tax-free. So those are fine. But then the question is, again, with BVI and Caymans, where are you going to open that bank account? So I think you'd need to, of course, speak with a tax professional to see what makes sense to you, which jurisdiction makes sense to you, given where you are and given where you're going to be making the decisions. Where's your management team going to be? But the conversation has to really begin as well with where's the money going to flow? And where the money flows tends to drive where your company is incorporated. So those are some thoughts that you need to take to your advisor to decide what's the best jurisdiction for you. Any other questions?
I have another question.
Mm-hmm.
Do you hear me? In regards to having like a company in another jurisdiction, let's say we have to have a company in another jurisdiction just to avoid bureaucracy. So if I live in Romania and I'm tax resident in Romania, can I have a company in UK, and how would be dividend taxed? Because in Romania you pay only 5% on dividend, but in UK it's a progressive tax.
Mm-hmm. So in the UK, if the shareholders are not resident in the UK, you won't pay a tax on the dividends. Typically, you don't pay a tax on the dividends. Now, if the company is in the UK, chances are the company needs to pay corporate income tax, which I think is about 19% or so. Now, when the money, in terms of the Romanian side of things, you may still have to declare, because Romania, like most European countries, you're going to be taxing your worldwide income. So I would imagine, of course, I defer to Romanian tax professional, but I would imagine you still need to declare those dividends and pay any taxes. So I guess the point I want to make sure and communicate is that just because you're in one country and your company is in another country, doesn't mean that the funds associated with that company in another country may not be taxable where you are. And again, the devil's in the detail, but if you're running a UK company from Romania, then the Romanian tax authorities may take the view that, hey, we will deem that to be a Romanian company because management and control, mind and management is being exercised from within our borders. So we reserve the right to tax that company as if it were a Romanian company. Unless there are ways of working around that. We can talk about substance rules, getting key decision makers, structuring it in such a way that you can argue with the Romanian tax authority that it is properly tax resident in the UK. But again, it's something to consider when you speak with your professional and preferred advisor.
Mm-hmm. Thank you.
You're welcome. Any other questions? Okay. Thank you very much for your time. It was a pleasure speaking to you, hearing from you. We have our contact details. Feel free to reach out to me on LinkedIn. I'm really big on LinkedIn. Or you can just shoot us an email. Keep in touch. And good luck with your individual businesses and traveling around. But please remember to don't forget your taxes. Have a good day, night. Thank you.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth? We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.